Now, Nigeria's economy demonstrated strong resilience in 2025, achieving a measure of macroeconomic stabilization that has positioned the country for improved growth prospects in 2026, according to a comprehensive review by the Center for the Promotion of Private Enterprise, that's CPPE. The report identified exchange rate stability as the most notable achievement of the year, with the Naira trading consistently within the 1,440 to 1,500 Naira band against the United States dollar. The stability restored business and investor confidence, helping to ease the imported inflation pressures that had weighed heavily on the economy in previous years. Well, joining us on the show to discuss how we can achieve stability, growth in 2026 with sustained reforms is Dr. Muda Yusuf, Chief Executive Officer of the Center for the Promotion of Private Enterprises, CPPE. Good morning, sir. Happy New Year.
Good morning, Vimbai. Good morning, Dr. Abati, and good morning, Rufai.
Morning, sir. Happy New Year, sir.
Well, Dr. Yusuf, you were projecting GDP growth of 4.0 to 4.5% for Nigeria in the year 2026. Now, you are close enough to the Central Bank of Nigeria, which gave a figure, I think, 4.5 to about 4.9%. But the last time we discussed this subject, I focused on the downside risks that you talked about. Improved performance in the non-oil sector, the services sector remaining strong, security, which can affect agriculture, inflation moderating. But specifically, you also talked about geopolitical risks. Now, since you made that observation towards the end of December, so much has happened. For example, in terms of geopolitical risks, look at what is happening in Venezuela. You talked about oil price volatility. Oil price volatility now looks like something that is real. As of this morning, the spot price of Brent crude has gone down, and it may get worse in the light of uncertainty in the crude oil sector. You talked about tax, how tax plays out in the year 2026. Now, we started this year with many people, controversializing the Tax Reforms Act. So, in the light of all these early developments, have you had cause to think of where maybe you revise your projection, or you think that we're still in a good place?
Well, thank you, Dr. Abati. Economic issues are very dynamic. They are dynamic because the variables that shape economic outcomes are not static variables. They change. That is why even when we make projections, we anchor those projections on a number of variables. So in the light of what is happening, of course, we need to worry about the risks to the outlook. Yes, many of us have projected very positive outlook, but just as you said, oil price volatility is actually a risk. And that is why we'll advise the National Assembly when they are considering the budget. They need to revise or review some of those assumptions, particularly assumptions around oil price and oil output. Because as we speak, those assumptions are really on the optimistic side. And one of the challenges we have had with budget implementation has been the fact that most of those budget appropriations are based on assumptions that are not realistic. Because the more conservative you are about those assumptions, particularly revenue assumptions, the better, for planning, and the better for the realism of even the budget. So I'm hoping that this year, those assumptions will be taken care of and made a lot more realistic. Of course, we have these geopolitical issues around Venezuela and all of that. Those who have implications for oil price, just as you have said. Although given the fact that up until now, The oil price, Venezuela has not been performing so well in the oil market. The output has been low, investment has been low. They have been suffering all manner of sanctions and all of that. So what is happening now may not materially affect the oil market, at least in the short term. Then, of course, you have all these security issues which could also pose a threat. And we also have issues around our fiscal projections. And just as you said, you talk about tax. The tax issue, it be just somewhat controversial, but what is more important is how we're able to manage the implementation, to douse all the apprehensions, to douse the anxiety and all of that. Those things are critical, because in matters like this, we need to be as pragmatic as possible. Yes, we already have the law. The law is the law. We have to comply with the law. Some of the controversies around gazetting and all of that, I think those ones are beginning to fizzle out. But the implementation has to be as pragmatic as it can be, so that all the anxiety around it will not create another major problem for the economy.
Okay. Thank you for those points. Now, I want to ask about this phenomenon of jobless growth. Because we continue to look at the growth numbers, the GDP numbers, things are looking up, the indices are looking up. But in economics, as you well know, economic growth does not mean economic development. Last year, we saw that by the end of the year, there had been GDP growth significantly exceeding expectations, but it was jobless. So do you foresee this being another year of jobless growth? If so, how can that be corrected right now from the beginning of the year? Or is it something we should just accept?
Well, job creation is about investment. And investment is about the quality of the investment environment. And there are two major factors around the investment environment, key enablers. We have the macroeconomic factors, which we have which we have discussed briefly in terms of, the stability and the fact that the macroeconomic environment is stabilizing. That is one leg of it. The other leg of it are factors that impact on competitiveness and productivity and sustainability of investment. Macroeconomic conditions are good, but you have structural issues that can enable productivity. Because if you have a good macroeconomic environment and you are still grappling with productivity issues, it will be very difficult for those who are investing to be able to sustain their investment. It will be very difficult for new investors to come on board, because it is through investment that you can create the jobs. So that is why, yes, macroeconomic stability is good, but it's not sufficient to deliver the kind of outcomes that you are referring to. We need to address productivity issues. We need to address competitiveness issues, which generally we regard to as structural issues. And these are issues that both the states and the local government, and the federal government have to prioritize going forward. Because I agree with you, what is the point in having growth that does not deliver jobs, that does not even deliver welfare? These things require specific policy intervention measures outside the macroeconomic conversations. Should be talking about energy, talking about power, talking about regulation, talking about how supportive our institutions, state institutions, are they facilitating businesses or they are frustrating businesses? Some of them constitute obstacles to business. What is happening in the ports? You have just talked about insecurity. No, all of these conversations are not macroeconomic conversations. There are structural conversations. There are critical business enablers that we need to be more deliberate, more intentional about if we really want the growth to translate into jobs. And it's not just jobs, it's also about welfare. Because that has been the conversation for the whole of 2025. We say, yes, the economy is recovering, but people keep complaining about the fact that they cannot feel the impact in terms of welfare. So there has to be deliberate, measures at the state level, at the federal level, even at the local government level, to ensure that we address those obstacles, to productivity in the economy.
Okay. Real quickly, sir. Then where will the growth come from? Also, another part that spurs growth, which is consumption, has been hit hard by inflation. In fact, there's a story on the headlines of the Punch today that was talking about because of discretionary spending due to inflation of goods and services prices, the families are cutting back close to 14 trillion in spending. What sectors will the growth come from in this new year?
Well, the way things are now, if you look at the GDP numbers, the service sector is contributing close to 57% of the GDP. And quite a number of things are happening in the service sector. If you take, trading, for instance, a lot of jobs are taking place. If you take ICT, if you take e-commerce, if you take the entertainment industry, well, not quite, but a lot is happening in the entertainment industry. And of course, you also have agriculture. These are sectors that you have construction as well. These are sectors that are, employ a lot of people. These are job elastic sectors. So what I think is important as part of the employment or job creation strategy is to identify those critical sectors that are job elastic, so that when they grow, they deliver more jobs. If construction is growing, construction will deliver jobs. Imagine how much labor you will need, even if you are just putting up a bungalow. Imagine the different kind of skills and artisans that you have to engage. The same thing with agriculture. The same thing even with ICT. The same thing even with the distributive trade sector. The distributive trade sector is a very large sector by virtue of the fact that we have a large population. So I think in terms of the sector that can deliver growth, it's about agriculture, it's about manufacturing, it's about construction, it's about trade. But just as I said, we need a combination of policy instruments, trade policy, fiscal policy, monetary policy, to be able to ensure that we support all these prospects in all these areas. Because if there is no prosperity for those who are investing, if there is no prospects for them to prosper, they will not put their capital there. And these are the people that will create the jobs, not the government. It is the private sector that will create the jobs. So it's a function of the environment, it's a function of a combination of policy instruments to support those initiatives of entrepreneurs in the economy.
Okay, Dr. Muda Yusuf, we've talked about policy, the environment, and, prosperity, building prosperity. One of the issues we discussed on this table this morning has to be the fact that President Tinubu has now constituted a board for the NUPRC and the NMDPRA. Even if in the statement they were saying that the names of the secretaries, the company the legal advisors will be sent to the Senate. Well, I imagine that the Senate doesn't approve the appointment of legal advisors. That's done at the board level, at the company level. That's one omission, I think, that they will have to address. But I wanted to ask, what do you think of these new boards that have now come on stream? Better late than never, I said. The NMDPRA, the NUPRC board, and where is the role of regulation, the regulatory authorities within this whole arrangement? You can have policy, you can have prosperity, but the regulator is always very important. And we've had issues with regulation of the business side.
Well, the regulatory environment is a major factor in the investment environment, because the regulators can sometimes be a major impediment to investment. We know what experience some of our investors have been facing. You know, so getting the regulatory environment right is extremely very, very important. It's a function of the quality of people that are on the board. It's a function of the quality of people that are in the management. And it's a question of the commitment of those in the regulatory space to actually promoting the economic growth and looking out for the larger good for the society. One challenge we have had with many public sector institutions is that many of them have become highly transactional. Transactional in terms of looking out for what exactly will benefit them. Some of these things may not even be happening at the level of the head of those institutions. But if you talk to the private sector players that interact with some of them, it can be a very, very frustrating experience. You know, especially when they interact with the bureaucracy in some of these regulatory institutions. So the transactional mindset in the public sector, particularly those of them that interface with investors, I think is something that we need to deal with if we really want to make this economy a much better economy. Because we have an economy that is blessed with a lot of entrepreneurs across all sectors, across all ages or age groups. But where you have cause to interact with some of these regulatory agencies, it can really be very frustrating. So as part of the reform, yes, we are talking about macroeconomic reform and all of that. We should also be talking about regulatory reform. We should be talking about public sector reform.
Correct.
So that you have a public sector that is also in alignment with what we want to achieve as an economy.
That's it. So, all right, on that very profound note, Dr. Muda Yusuf, we thank you so much for your time this morning. And we hope that all prophecies for economic growth and job creation for 2026 will be fulfilled. Thank you so much for your time.